What are today's mortgage interest rates? Everyone's going to hate this answer, but honestly, it depends. It's going to depend on your credit score, your down payment, the occupancy type. Is this your primary residence or an investment property? And even the type of home. Is it a single family residence or condo? This and more can impact the interest rate. So, I feel like the easiest way to really discuss it is to look at it. So I want to actually price out a scenario and take a look at it together. So you're going to see what I see. So we're going to zoom way in on this. We're going to make up a scenario here. We're going to go conventional, single family, primary. Kind of keep it basic. I'm going to put a pretty decent credit score in here of 760. And let's say we're trying to buy a $500,000 house. And just for simplicity's sake, for this example, we're putting 20% down. So that means there's going to be no mortgage insurance. And there's a few other boxes here. This is kind of stuff we can get into another time. I just want to look at these rates. So we're going to hit price. It's taking a little longer to think than normal. Okay, here we go. All right, when someone asks what are interest rates, as you can see, there's actually a whole lot displayed here. It didn't just spit out one rate based on this scenario. But you'll also see over here, this QM status, qualified mortgage. Some of these have X's, and it says that they would fail the points and fees test. Honestly, with that being the case, I don't even know why they showed these rates. I don't even know why they're here. But even though it's here, you would not be allowed to choose this rate because it costs too much. It's too expensive to buy this rate. So what do I mean by the rate? So if we scroll down, we can see then these numbers turn green. So all of these red numbers here for all of these interest rates, they come with a cost. So each eighth, as we go up in the interest rate, they call them discount points. These are percentages. They're points of the loan amount, and you can buy down the interest rate. So for example, 5.75 today costs 2.968% of the loan amount. So it's 2.968% of 400,000 for this scenario, which equals $11,872. And again, as we go up in interest rate, this cost is going to come down until we hit this credit. So today, this 6.625 comes with a credit of $732. This credit comes directly from the lender and goes towards your closing costs. We're kind of at a choice here. Okay, do we want to pay 0.174% or $696 to get 6.5%? Or do we want to get this credit at the 6.625? If we look over here, this is all the principal and interest. So for 6.625, your principal and interest would be $2,561 versus $2,528. So the difference between $2,561 and $2,528 is $33. You would save $33 a month going with the 6.5% interest rate. But again, you have to pay to save that $33 a month. You have to pay up front $696. In addition to paying that $696, you're losing the $732. So technically speaking, it's costing you $1,400 to get this rate, technically speaking, right? If I take, $732 plus $696, I got $1,428. That's actually what I'm going to use to determine my break-even point. If I lose the credit here, and then on top of that, I pay $696 in order to save the $33, I'm going to divide 1428 by the 33. It would take 43 months of saving $33 per month to break even from not taking this credit and paying this cost. Makes sense? So in 43 months, I'll actually start saving $33. It'll take 43 months for me to actually reap the benefits of saving $33 a month by going with the 6.5%. So in this particular scenario, based on today's pricing, I would actually quote this client 6.625%. Now they might come back and say, oh, well, you know, I was talking with another bank or another broker and, you know, they were offering me 5.99%. And I would just caution you to ask to see their fee sheet and see if they're charging you discount points. Because again, I can offer 5.99, but it would cost you an additional $7,400 towards your closing cost. And while sometimes that makes sense to do, if you have seller concessions that you can use towards buying down the rate, or even some people, depending on qualification purposes, you know, for debt to income ratios and things like that, they have to buy down the rate in order to qualify. You know, sometimes you do, sometimes it makes sense, sometimes you have to, but for the most part, I would not recommend this. I wouldn't just up and advertise that I have 5.99% to offer. I'm going to show the 6.625. And I've had clients who sometimes they do take this credit. Sometimes debt to income isn't an issue for them, and funds are. Maybe funds aren't an issue necessarily, but yeah, they want to take this fat credit here and slam it towards their closing costs. One of the last things I want to say on this particular video about interest rates, these costs and credits, these are what change. These change day to day, sometimes multiple times a day. And this is what drives the interest rate. So again, based on these numbers, that's why I determined this client would be better off going 6.625%. But, you know, we'll see in future videos to come when I price out this same scenario, these numbers are going to change. And maybe tomorrow, 6.625 comes with the cost. Maybe it comes with an even higher credit. And so then I'm going to shift and say, okay, you know, tomorrow actually 6.5 is better. It's these costs and credits that are changing, and that's what's driving the rate. I do want to show more comparisons where we show if you're putting 5% down, does it still make sense to go conventional versus maybe FHA, things like that. But really today I wanted to show the rate stack. So there's not just one rate out there. So I hope that was helpful. I hope seeing the rate stack this way helps you know, just understanding what interest rates are and how interest rates are determined. And when you ask what are interest rates, it depends. It's going to depend on your specific financial portfolio, your goals, your preferences, things like that. And so this decision on the interest rate is something that I would help with. Please feel free to reach out with any questions, and I look forward to providing more examples. Oops. Have a great day. I'm gonna throw a couple in the video. How did that go? What do you think? Was that okay? How'd that go?